Hi, and welcome again to another edition of Market Analysis for today, October 21st of 2024. I'm Giovanni Benecourt, and this is a recording half an hour previous to the Open, U.S. Session Open. All right, so let's get with it. Trees don't grow into the sky, the old proverb says. But the S&P 500 feels like a mighty oak that keeps on rising. The index notched its 47th record close of the year on Friday. It's up 23% since January 1st, and that's on top of a 24% gain in 2023. At some point, investors have got to wonder how long the good times can last. The answer, so far, is longer. Earnings will be key to determining how much higher the index goes. After the big banks reported last week, things are still looking up. The rotation out of the Magnificent Seven technology stocks is continuing. Other sectors are catching up, and that's good news because it means the market isn't overly dependent on any one sector. About a fifth of companies report this week, including car makers, Tesla, and General Motors, telecoms firms Verizon and AT&T, and Coca-Cola. The thing to look out for is how confident they are that consumers will keep spending. If American shoppers continue to splurge, there's no reason to think the economy will be an obstacle for more stocks gains, especially with the Federal Reserve on track to keep cutting interest rates in the coming months. There are other small pieces of good news. China is keeping up its wave of stimulus with 2 new rate cuts. A recovery in the second biggest economy will help. An airplane maker, Boeing, which is by all accounts having a very bad year, may be on the cusp of ending a crippling strike. There are still warning signs that signs could turn sour. While markets have been taking politics in their stride recently, the election could still create some instability. The conflict in the Middle East hasn't spiked oil prices, though that could change too, and is already feeding demand for haven assets such as gold, which is hitting records too. But for now, there's little to suggest the market's branches are reaching too high. So that being said, let's take a look at what we have here in front of us. Speculation, the speculative for what's going to be happening today. So we said that during the London session, we did open with a gap up, small gap up, and we're trending lower. Obviously, this is correction. Okay, that was attained. So let's take a look at the let's see if we can get a monthly to see just how we're doing in this. Now, taking a look at the monthly chart, we can obtain the low of the month, which is 19,817, and the high, which is 20,657. And so those two levels are obviously can be used as level of support and resistance. And that's are the wicks, right? Now the body itself, the width of the body. So we see that right now the market is trading right around 20,400, and then the low where this candle open is 20,232. So we can actually use that as our level of support for the month. That's just another way. So let's use that 20,232. Around there, okay, and then we can use the initial first level of support right around where we are. Obviously, we're right there, so let's just use that high wick, okay, as our first level of support, and then we can use that all-time high made in July as our second level of resistance. I'm sorry about that. By resistance, okay, so let's just use, so this is the high 2657, okay, 657, so let's just see if we can get that right around there, okay, and now let's take a look at the daily to see how much more other levels we can come in and speculate from. Now, out of this daily, right, in this daily chart, we can come in and use the Fibonacci retracement tool using those levels of, of support and resistance. So we're going to use here and we're going to use here, and then within from bottom to top. And then obviously we're going to be using those levels of Fibonacci extension, which we are below it as probable level of support. So the next one will be 0.78, which is a Fibonacci number, but the golden ratio is 0.618. That would have been a level where we could probably come in and look for obviously a reversal. But in this market, the market is looking to continue to do a deeper correction, which is obviously healthy. We want those corrections to be done. We did close on the green on Friday, so let's see if today will be a different scenario for the markets, at least for the Nasdaq. That's what we have in front of us. So there we go. We have here already our level of resistance and our level of support for the Nasdaq for today. So let's just leave those levels as they are. Okay, that's for the Nasdaq. So those are where we probably going. So obviously going long. Then let's take a look at the S&P 500. Okay, so again, let's just go into a monthly. And now here in this monthly, let's just take out this white lines. Let's take out this. All right, so here, since we are making highs, let's just use the lower where the candle open. Actually, this is opening at 5,806. Okay, so we are right around there. And let's leave that 6,000 as our resistance, which is a target anyhow for this puppy. Let's go down to an hour and see where we could probably come in and find some levels that we can use. All right, so we're seeing that in this hourly chart, the market has been fluctuating lower. In this hour, the market is looking to obviously to continue. The previous hour was a recovery. So let's continue using the moving averages as our probable level of resistance and support. In this case, resistance, if the market is below it. So pushing higher for the S&P. So let's go down to the Dow. All right, so we have the Dow. And the Dow in this hour chart. Let's take a look at the monthly. And in this monthly, wow, this is just a whole lot. This market has a lot more volatility factor into it. So let's take a look at that hour chart and see how. Okay, so in this hour chart, we see that the market is fluctuating to the upside. So we can use again the moving average in the medium of the Bollinger Band as a probable level of resistance to continue fluctuating to the upside, finding trades. Russell, okay, so Russell on this hour chart also. Okay, so we have the 20-day moving average and the 50-day moving average intertwined. So that's gonna be a strong level of resistance right here. So let's see if we are able to fluctuate above that. We are below the RSI, implying bearish momentum to the downside, obviously. Take a look at crude oil, which is looking to rebound after fluctuating below 69 last week. So we are back up, looking to stay around 70. So let's take a look at a monthly in crude oil and see what we can come and figure out what's going to happen. So let's erase this line. All right, so wow, in this monthly chart we have a very wide spread, a very wide range. I mean, look at the wicks on this puppy. So obviously, as you can see, after trading higher, it was pushed lower, but it's still in the green for the month. All right, so any fluctuation to the upside, okay, we want to be able to find the middle of this candle and say, okay, so around 71-ish could be a level where we could probably see the market continue to fluctuate towards. Let's take a look at the 1 hour again. And here we are in the 1 hour. And so in the 1 hour, after having a nice run up to a nice run up and out of the Bollinger Band, it was walking the bands, the upper bands. Now it's doing a correction. Perhaps that correction has been already factored in, or will do a deeper correction as the US session opens. We have the wicks have created a double bottom here. So let's see if that will be a nice level for a continuation to the upside, or will it just continue selling off? Nat Gas. So in this 1 hour chart, Nat Gas had been recuperating itself after fluctuating below around the 118, the 218 level. Sorry about that. And we probably continue to do that push to the upside, as we saw how the market just fluctuated and flushed these two previous candles. So now it's just right below the 50-day moving average, looking for some traction. So let's see if that will happen. All right, so gold. So we have hit that 2740 marker. That's a resistance that was placed. So it's being tested. The upper band or the Bollinger Band is there. So we can just probably since it's being tested, let's just raise it 5 points. Leave that there. The previous resistance now turns into obviously a support level. And let's use this level. You see right here is going to be 2730. So let's just use that as our support as well. And I know the support levels are down here, but in this scenario, since we're looking to continue to do more and higher levels, 2,100, 3,000 by the end of the year. So just find momentum or opportunities to buy. So silver is completely trading above our level of resistance. So let's just be conservative and use 34 and a half, and then bring that puppy of the support to the 50-day moving average around 33. So let's see if it'll reach 35 later on today. So nice push to the upside. Copper is fluctuating to the downside. So let's see if the 200-day moving average along with the 50 will give that support. Will we find that support in here? So that's what we need. Just wait and see. RSI is kind of creeping into a bearish momentum. Bitcoin, after fluctuating towards the 70, it is on a tear now. So let's just lower that level of support to 67,600 in this, and let's just bring down our level of resistance right to that Bollinger Band. So for now, obviously you're going to with momentum to the downside. The euro, well, the euro is looking to stay north of 108. So let's just use 108 200 for our level of support, and then just bring down a tad to a 200-day moving average. So let's see if it'll make a nice move to the upside. The pound, our resistance way too high. Let's just use that 13600, and our support is 130. Let's see if we will be able to sustain ourselves along this, just sideways. The dollar index has made a nice comeback, fluctuating above the 50 and the 20 moving averages. So let's see if it'll sustain itself. Let's use the 200 moving average as our level of support. And so let's see if the dollar will continue to recuperate, get stronger and stronger. And that'll put obviously some pressure on the metals and currencies. That's it for today. Have a nice trading day, and I'll see you tomorrow.